soil. A fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
The Credifi testnet is live, so head on over to demo.credifi.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
Ladies and gentlemen, this is Adrian Zdunchik, CMT Charter Market Ignition. Welcome back on the show. Welcome back to the streams. This beautiful sunny day right here where I am right now. And the sunny day actually transpires to a lot of positiveness, to a lot of positivity, if you will, to a lot of positive vibes, that I see in the markets, which is interesting. Just an interesting side note eventually, because the weather tends to correlate with the markets to some extent. What's happening on the weather markets, what's happening with the with all the crops, with all the grains, with all the food market eventually translates to what's happening anywhere else as well on the financial markets, which is interesting. Welcome again to the show. This is a good opportunity to see what's been happening over the course of the past couple of days, with the market and around it. Please let me know, guys, if you are here interested to learn anything particular, you have any questions, please feel free to drop them in the comment section to this very particular stream, whether you're watching it on X/Twitter or on our YouTube official channel at The Birb Nest. So without further ado, I'd recommend so that we actually kick off and see what's happening on the market side, okay? Shall we? So, what we can tell is that the Dow Jones Industrial Swell, it's flirting with the 40,000 points. 40,000 points eventually is, is a big round number. We tend to assign and attribute certain magical meaning to those numbers, even though they do not necessarily have to be anything of magic at all, right? However, the most important point eventually translates to the market being positive, the market being bullish, the market being in the rising mode, the bullish 20-day versus 50-day moving average crossover, while the rising 200-day moving average highlights the prevailing dominant tendency for the market to go up. Well, it seems it's another rally movement that nicely coincides with the overall market direction. And those types of movements tend to persist, right? Those trends tend to persist. And a successful close over 40,000 points may have a little bit of this magical meaning after 0.18% growth from the market open today. On the S&P 500 side, we're flirting with 5,300s, which is also in the all-time high region. 5,300s, very similar point right there, for the market to be up again 0.03%. So there is not much kind of like aggression. There is not much dominance, if you will, from the S&P. However, the growth is still there, right above the previous highs of March, April. After this local correction, slipping slightly below 5,000 points, and here we are 7 or 8% up from the actual lows right there, right? Which is interesting on its own. And then, taking a look at the actual energy sector, let's say, if you will, there has been some local corrective type, to the downside, with the sequence of lower highs and lower lows. That translates to a little bit of a slowed upward tendency, right? The market is still moving up. It's moving up on the 200-day moving average basis, which is quite a change ever since the year started. right? From the previous kind of like a stalling flat tendency, the market just curved up a little bit with the recent push, also translating to higher inflation data just a little bit by it. And the XLE is defending, as this defensive sector is defending the support conjunction of the crossover for 20-day, 50-day moving average at around 93, 94. All right, and well, let's see where it goes, because the market is up, the trends are up, except for the short-term trend. So short-term weakness in the medium-term trend strength, while the strength of the long-term tendency seems to be also upward pointing. So to the bears, I would take it with a little bit of a caution for being potentially on the wrong side of the trend. On the interest rate side, the 30-year bond prices are actually right now testing this critical importance support resistance level of 118, which is actually coinciding again with a lot of congestion from the key moving averages that often highlight those critical fair quote unquote levels to the prices. As long-term investors anticipate on the long end side of the maturity curve right there, of the yield curve, pointing a little bit of higher expectation for the market to go hard. The markets eventually are those discounting mechanisms, right? They discount all the hopes and all the fears of investors. And if the market moves up, it translates that the future is positive in the eyes and the perception as they perceive, as the investors perceive. With the 10 TNX being for the 10-year yield index right there is basically kind of like just pushing, falling, below key support levels, previous resistance, now the current support, right? So the polarity flip has seemed to be, seems to be occurring right there. So again, to the bears, I wouldn't necessarily go and short it immediately, right? Or expect that the rates are supposed to fall out of nowhere, because the overall main tendency for the market still remains up, with short-term weakness and long-term upward trend, medium-term upward trend, right? So this may prove to be a little bit of a reversal with this overthrow on top, a little bit of a bearish engulfing candle. However, like I said, the long-term tendencies are to the upside oriented. Dollar, let's take a look at the dollar. Dollar is similar to the TNX, just like you notice. It's a little bit of a deeper correction with the support resistance, kind of like being a little bit more in the danger zone, if you will, for the dollar bulls. Even though the trends are still moving up, the short-term corrective type seems to be a little bit more strongly penetrating to the previous, again, potential support resistance level. So the polarity flipped here in this particular case has weakened, on a relative basis, technical side, the placement of the price movements versus the actual potential support resistance level seems to be favoring 10-year yields versus the dollar right there. VIX at 12.14, minus 0.2, minus 225, minus 217% right now as we speak. Now, in the long range lows distance, right? Lowest since actually December 2023, which is where we went even below 12. So the implied volatility index, as in the estimated, amount of puts being taken for the 30-day outlook ahead on the S&P 500 side for the options. This is what drives little uncertainty. There's not much uncertainty, it seems, right? Traders anticipate less and less of the implied volatility to be had in about 30 days. So traders seem to be a little bit less cautious than they were just a couple of days ago. Right, and if we are to move towards the cryptocurrencies, well, what we can tell and what we can say overall is that, with the correlation, 7-week correlation dropping to 0.23 ever from the high region, near 0.75 or even 1, close to 1, when there is an ideal correlation. On a medium-term basis, on a 7-week basis, actually tells me that, well, the trends are moving up. The strong trends bull markets show no signs of exhaustion. That a little bit of a falling tendency for the market to correlate against the S&P 500, right there, typically informs and aligns, with some major market movements, right? Especially when the correlation goes heavily negative, we often saw those massive massive reversal points coming, right? Just like here, just like here, just like here, just like here as well, right before those major movements, right? So I would take it if anything, for something positive, right? For the correlation, at least in the recent terms, for Bitcoin being, even though it's falling against S&P 500 on a 7-week basis again, I would take it as something positive at all. So the long-term trend is up. Long-term trend is maintained. Again, the long-term resistance is broken. New all-time highs is there. The trends are moving higher. The corrective tides tend to be pinned by those falling correlation regions. I would be, if I were a bear, I would be very cautious there. Otherwise, there seems to be a decent breakout lately. There's been obviously some local slowdown, understood as this falling channel. This falling channel eventually and ultimately maybe telling us something, right, of a potential buying opportunity, because by the main definition of a bull market, and it's just not my opinion, it's a fact, for this line, this 200-day moving average, representing directly the trend of the bull or the bear on a long-term basis, it keeps climbing, right? There's no single sane way to say that this is a bear market, because the main tendency seen as and reflected by the 200-day moving average is pointing to the upside, and it's actually growing and accelerating, right? The momentum breakout has actually occurred as well. On the top, there is an RSI against, put against, and laid over with the 50-day momentum trend. And there's an actual positive breakout right there with the RSI breaking towards the upper half of the range, towards 60. So there is a little bit of a breakout going. This breakout is backed by the RSI. This breakout is also backed by the volume surge, right? There's an increased volume spike that has just come up, where the volume is twice as high, or 3 times as high as it was just a couple of days ago. Something to consider. Again, I see a lot of bullish confirmation so far for this breakout, and even more importantly, the bull market corrections, right, tend to be, more often than not, tend to be considered the buying opportunities, the buy the dip opportunities. So again, if I were a bear, I would take those signals very seriously. Okay. Otherwise, again, the 200-day BPRO trend line, the baseline itself, the main trend line for my private custom system that I use for the medium-term trades, for the position trading, that lasts approximately 12 days, 12 to 14 days on every trade on average. Again, the support withheld all the bearish pressure, all the selling pressure so far. And if you remember, I was adding at 57,700 and a $60,000 right there before on the mean reversion basis. So we are quite up on that, 10-12% so far on those long-term buys, so not bad at all. And like I said, the main tendency for the market keeps climbing. There is no way to deny this. And if there is no way to deny this, I'm not going to argue the facts. And I took this buying opportunity signal on the mean reversion basis for taking those Bitcoin reduced pricing, the discount, the fairness brought back to balance, to normal, as Bitcoin actually revert back to the mean, pushing back higher right now. Right. Interestingly, there's been when comparing the long-term trends, the long-term charts, from the B2C against USD and the Japanese yen as well, putting the strength of Japanese yen against the dollar, basically, the yen denominated in USD basically continues to fall, while Bitcoin actually continues to rise all the time, right? So there's this interesting correlation where a lot of the movements ever since Bitcoin actually reversed, that pinned the major peak point for the yen strength, and ever since, that this yen continues to show weakness. Is this important? I would say yes, it's important. It's not of top importance. However, the Asian markets, the Japanese market, the Chinese currency, the yuan, there are a lot of Korean whales. There are a lot of heavy Bitcoin players and traders on the Asian side, okay? And observing those trends, basically observing the Japanese yen taking hits, can be taken as an additional incentive for those whales to be encouraged to approach Bitcoin. Otherwise, on the system side, I'm taking a little bit smaller trades right now, since I'm investing in a couple of bigger projects on a bigger scale. So kind of like just waiting for some projects to eventually start flourishing while the capital gets finally invested in a healthy dose of sequences. Right there, with the smaller trades that I'm taking, there's been a $70,000 trade that I took lately with a lot of chop going on, right? Flipping back and forth between the bear and the bull, between the bear and the bull all the time, just a couple of days, just over the past couple of weeks. It's been taken once, twice, 3 times, 4, 5, 6, 7, 8, 9, 10. There's been a total of 10 trades of being in and out of the course of the last 2 months, right? So it's been a very, very choppy corrective tide, all right? However, keeping those losses small and not getting over invested, not getting the too much of the position sizing right there, basically keeps my portfolio healthy and steady and easy on that part, right? So when I lose quite a lot of times. I lost about 10 times lately. With each and every single one of those flips, maybe a little bit less, right? Because each and every single bull side that I took was there. So this is the 5th trade that I took. So far, it's holding up well. However, like I said, with the recent addition to the long-term backs, eventually that's something to consider. So I don't search necessarily for much of overexposure at these days. And this is a kind of reminder: if you have any questions or something nice to say to Rafał, then definitely please drop your questions, drop your thoughts in here, and I'll try to do my best to cover them ASAP for you. Otherwise, there are just a couple of points, about what you might want to consider for taking, as a potential bull side, or whether or not we are, anywhere close to the peak. My good friend Kyung Ju actually takes this point, and it's inspired me to show you a couple of other charts alongside the presentation that I just gave at the Next Block conference, NBX in Warsaw, for the Polish Blockchain Week. Eventually, Key says that Bitcoin is in the middle of the bull cycle, which is something that I fully agree, or even a little bit earlier than the bull cycle, than the half of the bull cycle. Its market cap is growing faster than its realized cap, a trend that typically lasts around 2 years. Okay, market cap versus realized cap. So that's something that I also observe and portray a little bit differently. It's exactly what it's going to show. If this pattern continues, the bull cycle might end by April 2025, which is exactly what I'm taking a look at, right? So taking just a little bit of a part, about this chart. One of the ways to know whether or not we are in the bull cycle or anywhere near the bear cycle, common for the bull market peak, for the bear market to start, is observing the market cap versus realized cap. Basically, as a little bit of a comparison, expressed in the statistical terms of the MVRV Z-score, right? So measured in the number of standard deviations against the actual mean tendency. And what we can tell is that by the orange line, there's nowhere near that we can actually expect the bull market to be over at this stage, right? On the right-hand side of this chart, basically, we are taking a look at at the very healthy dose of price valuation and more of the fundamental terms, right? Because this is a little bit more of a fundamental valuation indicator. It doesn't have much to do with technical analysis except for the persistence of trends. However, what matters is that the typical situation for the more bull market to peak, where critical peak twists came into the play, where whenever the MVRV expressed in the Z-score terms broke and exceeded the 7, right? The ratio equal or more than 7. We are at 2. Just from 2-3 days ago, we are actually at a ratio equal to 2. So there is nowhere near the bullish market ending theme. right? Nowhere near. Also, the actual let's take a look at this one. For instance, the MPY, the minus position index, right there, being also not favorable at all for those who actually believe that the bear market is about to start, or that it's just already started, just because Bitcoin had a little bit of a slowdown while all the other averages are up, right? Again, historically, anything that brought on the minus position index, right, versus for the actual minus outflows against the yearly rate of the minus outflows, they came in some critical major peaks, or at least local slowdowns, right, local inflection points. They don't necessarily indicate like some massive reversal peaks. They happen at times so that the miners take the profits and run, on an overall mainstream general basis, right? There's been a little bit of a sign for the miners taking profit a little bit higher. However, still there's no critical sign of the miners being heavily offloading, and this is also something to interest yourselves potentially in, as the miners chart, actually the miners cost, the mining costs are at $73,000, while just a couple of weeks ago they were above $100,000, right? They were basically about $115,000 even, right? That's something to consider, because eventually those big numbers for the mining costs, for the production costs, bring in the question of what rates for the miners are needed to maintain the profitability of their business, and eventually their businesses need to be operated on a profitable basis, right? So they need to maintain eventually above the production costs in order to be profitable. So eventually the business itself, pushing the Bitcoin prices higher, eventually indicates also potential future growth. What else? One of my favorite indicators for the net unrealized profit and loss, like I said, also measuring the ratio of the realized market cap, which is the sum of all the transactions basically taking place on chain, versus the actual market capitalization of Bitcoin, which is how much money there is, right? When we compare the disparity between the sum of all the transactions and how much money there is, we can get an information about how bloated the market is, how irrationally extravagant the market is, or exactly irrationally exuberant, right? So again, historically, anytime Bitcoin rose above 0.75 on those terms, as in the profitability rate of traders was about over 75%, we tended to see basically some major reversals pending, right? And we are nowhere near there. The last values is 0.55. So there is quite a long journey, quite a long distance basically to be made on the NUPL basis, basically telling you that 0.75 versus 0.55. Let me just make some quick calculations. 0.75 versus 0.55. This basically tells you that at least 36% higher if we were to put it against the current $67,000 market price for Bitcoin. It would place us somewhere closer to $91,000 just on this very basis alone, right? But take it with a grain of salt. However, what you might want to consider is eventually that there is no way that the NUPL, by again the ratio understood as the difference between the realized cap and the market cap divided by the market cap, how much difference there is against the market cap basically tells you that we are nowhere near close. We're nowhere near done. We're actually long behind any question about the bear market right there. And finally, let's take a quick look about what's happening on the spot flow, right? So this is the block. I haven't subscribed to them yet. However, I like to observe a little bit of what's happening right there with the total volume, total cumulative volume coming from the spot Bitcoin ETFs. Basically tells you that's 260 billion, with the current net flow being positive on 300 million for the total net flow basically coming. There is some serious there is some serious amount of volume generated and interest generated by those ETFs, Bitcoin ETFs. So if anything, their impact is more positive, with Grayscale basically leading with a total ETF AUM of 18 billion against the IBT BlackRock iShares Bitcoin Spot ETF of 17. So there's 1 billion, less than 1 billion ETF AUM, asset under management difference. However, those ETFs tend to be something to accelerate the growth, right? It tends to be something to consider when all those big players, they're showing a lot of interest, they're showing a lot of institutional demand, they're showing a lot of demand from the banks, from the investment banks, and being desired for Bitcoin to be something desired as a means of diversification their portfolios. With the Sharpe ratio, with the risk measures, risk-adjusted returns basically being very, very decent, I would say that it's something to consider. I wouldn't concentrate those positive massive trends, right? As long as the spot Bitcoin ETFs volumes, cumulative volumes on the right there, continues to climb so aggressively, the AUM is there positive, and at the same time the net flow is positive. I wouldn't necessarily take it as anything bearish in the near term. And one question that is, Andy Cieśla, cześć. Można prosić o analizę GRT. Pozdrawiam z podkarpackiej wsi. Pozdrowienia. So this is a GRT. Let me check which coin that was, because I might have done a late thread about this, I suppose. Yes, let me check. Right. So there was a thread that I lately did about GRT and the graph protocol. Again, I'm not invested. I'm not by default. I'm not sponsored to say this. Again, this is honest review, so take it as you will. So GRT, that was the chart that I did some time ago, about 2 weeks ago. For the polarity change at that time, it was fairly positive, with a little bit of a down day. So GRT token. Let's take a quick look. What's happening? And well, on a monthly basis, where are we? Are we a little bit higher? Yes, we're a little bit higher than we were just a couple of days ago. There's decent growth today, clearly from the market open from the very start. 7.4% up today, 3 billion market cap, with a total of 171 million basically on the volume side right there. You know, if I were to, you know, make a guess, you know, there's some decent tendency. There is some breakout attempt on the monthly basis, from what I can tell, right? Under the previous rejection, you know, there is an actual tendency for the market right now to reaccumulate just a little bit lower and actually burst higher, right? So I would say there is an amount of information telling me that this is something of a decent breakout eventually, right? So see, I have no idea what the future holds, right? I have no way to predict that. You know, there's no way or means or tools to predict the future for sure. However, it tells me that this decent, you know, tendency in the polarity flip for the previous resistance trend into support and taking us a little bit higher, you know, that's something to consider. If I were a bear, I would definitely not sleep well. If we manage to climb and make a new high over 0.40, or at least the previous high of 0.44, let's say push it 0.45 dollars, you know, that's something as a game over for the bears, it seems, right? The bull market breakout is there. The short-term breakout is there. There's some volume. There's some decent push. Yeah, it looks fairly decent. It looks fairly decent so far. And that is, let's take a look for Miro. I don't know what the Miro is, or at least I cannot recall. Although let's take a very quick look for the same reason. So let's take the Miro right there. Let me just tune in and adjust this. And that's going to be the last chart request that I'll do. today. So again, 10% growth today. Again, please take it with a grain of salt for anything that I say. I have no exposure or no idea what this project is or what it does. However, 183 right there for the market cap. It's a decent amount. Eventually 140 million, not the biggest one, with about 40 million basically being 15% down on the volume today. The market cap, the volume versus the market cap on the last 24 hours, the market saturation is 21%. So there's not much. 1/5 of the market is being actively traded right now, it seems today. Some decent choppy growth over the course of the last 7 days. There's been just a little bit of a sideways lately over the overall tendency for the market to go up 26%. So short term has been bullish. The monthly basis, the long-term basis, right there. Ever since March, we're kind of like chopping around. There is some potential breakout going on right here with some choppy base. Right. So there is some breakout attempt, it seems. So I would take it. Yeah, I would take it as a big warning. Overall, you see that there's some repetitive tendency with the coin being up so much. 48x, almost 49x, right there over the course of the year. There are a lot of coins breaking up to the upside, reacting very positively to what's happening with Bitcoin providing a little bit more ease. You had a lot of those coins, right? I mean, there are a lot of those markets. So it seems long-term bullish, for the market to go up so well, almost 49x obviously over the year. On the monthly basis is up 41%, right? Forever from here. So it's decent performance as well, with an attempt of a breakout on the short-term basis. That's something I wouldn't necessarily go and be the first to deny. Like I said, this decent polarity flip tendency right there may actually occur, so that if we manage to overcome this 0.25, if you will, right here, it's again case closed, game over for the burst. It seems for the further upward continuation. That's my take. Thank you so much for your kind words. Thank you so much for all the comments. And well, I think it's a great stop to thank for your comment, to thank for your watching of this. If you actually enjoyed this, make sure you hit a like. If you want, please feel free to consider to subscribe as well. If you're watching that on YouTube, at the Bird Nest. There's been a lot going on behind the scenes. We're gonna start unveiling some big details coming in the next weeks. Quite a big changes, quite a couple of big changes for you to consider. And what can I say? I'm very grateful and thankful, and it's great to be back. Thanks for your kind words. And I've been Adrian CMT, your host for today's session. Stay safe, keep cool, and God bless you all. Ciao, ciao, bye-bye.